Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. An interesting bullish double on Friday as prices reacted for a second week in a row to a test down to the 69.50 area by reverting back upwards almost immediately. And that's as we saw it on Friday. This theoretically leaves us with a small double bottom formed over the last 3 weeks in total. Be interested to see if we have a follow-through higher from this action. Above, we have two 50% Fibonacci lines now, the recent one at 71.84 and the July 21 to June 22 move at 7200. Further up, we have the congestion caused by the declining short-medium moving average, currently at 72.97, the flatlining long moving average, currently 73.25, and a declining medium moving average, currently 73.37. All this now threatens the target below for the big March to early June ascending triangle. A primary target X would be in the 66.58 area, with a secondary harder to get target X1 in the 63.80 area. There is also a double top formation, Eve and Eve type, formed from March to about to date. And this has a harder to get secondary target X3 in the 66.35 area. Finally, this also starts to counter the monthly key reversal down, or in reality an immediate monthly key reversal down made in June. Now, so far today, a gapping higher open since filled in and a stronger follow-through higher that's punched up through the both 50% Fibonacci lines above and further supported the idea of a small double bottom these past 3 weeks. Now it depends on the close. If we have a strong one, then I will relay targets on the top side next time. German DAX futures. A reactionary bullish above the stomach pattern and bullish double on Friday. This has made, much as in the FTSE futures, the action over the last 3 weeks or so looking like a possible small double bottom. It also starts to counter the idea of the last 3 or 4 weeks being a possible bear flag type action, and most definitely starts to also counter last month's monthly key reversal down. One pattern it does support is my question on whether the February to date action is a possible very large double bottom. Now, so far today, a slightly lower open, but then a strong move higher through some fairly clear territory towards the next lesser Fibonacci level at 13,115. This also supports the recent small double bottom idea. US E-mini S&P futures. A bullish white soldier on Friday, pushing the market once again over the lower time, currently at 37.92, of the old, broken January to March bearish shift pitchfork. Now, I know that this pitchfork has been broken, and the bearish Andrews pitchfork is the one that is running the market. But please remember the Times crossover of these back in mid-May and early June. Then perhaps you'll understand and see why this echo of this broken pattern still resonates. Now, I'd highlighted a crossover of times from these two pitchforks as periods where one would expect one or more of these following the volatility, a change in trend, or a reinforcement of an existing trend. And I've put them red circles on my daily chart around them. For your information, the next crossover, and indeed the last crossover of these two patterns, should they not be usurped by some other patterns or actions in the meantime, would be on the 12th of August. There's one other pattern I'd like to draw your attention to, and that is labelled late March to late April to date, possible bearish halfway hesitation. I've detailed two separate patterns as there is an argument as to where the pattern should actually start from, and that's assuming the pattern works in the first place. Therefore, target X for this pattern originated in April and is in the 35.55 area. Meanwhile, the lower target X1 is for the pattern originating in March and is in the 34.20 area just off the bottom of my daily chart. Now, confidence in these two patterns has turned quite low, and I may soon be considering retiring them. Now, so far today, well, a gapping move higher since filled in, but still a strong showing such that the upper time, currently 39.17, of the bearish Andrews pitchfork is now under threat. This also opens the door to possibly looking at the last 3 weeks' action as a possible double bottom type action, but I'm not certain about that yet. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Service International Limited. And here comes the final bit.